All right, y'all, back to war. Boy, fantastic job today. It sounds like a lot of you guys made some good money today off those breakout pullback zones we talked about last night. Well done on that. It's been a fantastic week so far. Now, we have a very interesting scenario for tomorrow. We had that big rally higher this afternoon that ended the day in a big bullish range. So bullish range right now on the lower time frame tick charts. But don't forget, we're still bearish on the higher time frame hourly chart. So bullish on the lower time frame, bearish on the higher time frame. I'll bet that's going to confuse a lot of traders for tomorrow. Now, we finished the day with a range today. Ranges love to rotate, right? We know that already. So if I had to guess right now, I would guess the money tomorrow morning is made on those fake out breakouts, trading that rotation back around. So fake out breakouts, I have a pretty simple way of timing entries on fake out breakouts. I want to cover that in tonight's video. I want to make sure by the time we're done tonight, you have an easy roadmap, a game plan to make some money tomorrow as well. So charts are looking pretty good tonight. Charts are ready. Time is ticking. Enough of the intro. It's been a fantastic week so far. Let's roll our sleeves up, get these charts all prepped up, and make some more money on what should be another fantastic day tomorrow morning. S&P SPY's ready to go tonight. Nasdaq triple Qs are all ready to go in front of me. I have three very simple but very important clues on the charts tonight that are telling me where I think the winning trades are waiting for us tomorrow. One of those big clues, it's right here on the hourly time frame. I talked about this earlier. We're bearish right now on the hourly S&P SPY, bearish right now on the hourly the Nasdaq, the triple Qs here. I like to use these hourly time frames as an overall directional filter, right? Kind of filters our trades in the best direction for tomorrow. That's one of three clues that are helping us find the best entries for tomorrow. I have two more important clues though on some tick charts, some faster time frames. Before we dive into those tick charts and talk entry tactics, some fake out breakouts for tomorrow, there's a couple things you want to be aware of tomorrow. There's no major news that we care about tomorrow. We got jobless claims, blah, blah, blah. Don't worry about that. We have the ECB announcement though tomorrow morning. So 7:30, 7:45, we'll hear from ECB tomorrow. So just be aware of that if you're trading before the opening bell in the US session tomorrow. ECB, they're going to probably cut rates again tomorrow when, of course, we'll get the press conference, but sometime between 8 o'clock and 8:30 Eastern time. That's definitely something you want to be aware of if you're trading pre-market. Also be aware too, it is a very dynamic situation right now for tariffs. We heard this afternoon from the White House that they were considering pausing or suspending the auto tariffs. So we know there's new information coming out pretty much every day right now. So we will be keeping our eyes on the news feeds tomorrow morning. That obviously is something that is very liquid, very dynamic right now. We'll be watching that closely tomorrow morning in our trade room as well. So be aware of the ECB tomorrow morning, and you better be with us in our trade room because, again, we'll be keeping up with the tariff talk out of the White House tomorrow as well. Let's get back to our charts, though, because the money is made on the charts. We know right now one clue tonight is the overall higher time frame on the hourly time frame. But let's drill down, though, some faster time frames, some tick charts. We trade tick charts in our trade room because tick charts make pattern recognition a whole lot easier. This, by the way, that's an 8,000 tick chart, upper left-hand corner. And if you're watching for the first time right now, that is the 21 EMA, in case you're tuning into the channel here for the first time right now. There are two really important clues here on the tick charts in front of us. We mentioned this earlier, but that big run up this afternoon into a trading range. Now, why is that important? Well, if you watch my videos, you know that ranges love to rotate, right? They love to rotate back and forth. And we use things like expanding triangles. We use things like pendulum swings. We call them symmetry above and below. That rotation is a really, really big clue for tomorrow. But it's not the only range we have on the chart. There's actually two more ranges down below us, a range right there and a range right there. Now, if you watched last night's video, hopefully you watched last night's video, made some money on that breakout pullback zone. We know that when ranges break out, they love to break out pullbacks. So we're going to break out pullback zone at the 58.20. I got breakout pullback zone at that 57.76. And I'll show you these levels on the Nasdaq a bit later on in the video. So if we understand the situation that we're dealing with right now, oh, and by the way, Looky what I see up there. There's that breakout pullback zone we talked about in last night's video, right? That's the unfinished business zone we mentioned last night. So if we understand how ranges work, how ranges love to rotate back and forth, that's why I said earlier, it looks like fake out breakouts are probably where the money is made for tomorrow. Now, one of my favorite trades for tomorrow would be a bear trap and a fake out breakout down there. That's a little bit more difficult to talk about because we're overall bearish. I'm going to talk about that a bit later on in this video right now, but hopefully we'll go higher here. Hopefully we'll get this run going higher overnight here. This range, of course, will want to rotate back and forth like this. There are 4 trades I'm going to look for if we go higher here. One trade's a bull trap. Now, when I say bull traps, remember, my favorite way to do this is don't try to pick a top on this. Wait for the pullback. Let the buyers chase after this right into all of that resistance. Remember, we're an overall bear market right now. So we've got to get a little more than that to call this a bullish range breakout here. So once I see those buyers trying twice, I'm going to take my sell order and try to sell right into those stop losses with that bull trap. We know where the market wants to go, right? It wants to rotate back down again. So as it rotates back down again, this is what we add to our winner. One of the biggest improvements I made in my personal trading over the last couple of years is adding to winning trades. An easy way to make more money is to add to your winners. We call these add-on trades in our trade room. It's very simple, right? It's a lower low in price, move right above that prior high, that add-on. So 2 out of 4 trades I'm watching for tomorrow is definitely to be a bull trap off the high and add on as we go lower. And remember, that breakout pullback zone over there would be a great place for a target. The amount above, the amount below, all of those will tell us where to take that final target. And again, a little bit later on in this video, we'll talk about how to buy this thing back up again because we're an overall bear market that's a little more advanced. We're going to cover that a bit later on, so make sure you keep on watching. Now, sometimes we'll get that run up, and there are so many bears up here, it just gets whacked right back down again. Sometimes I don't get the chance to trap in those buyers and sell into their stop losses. If we run up and get whacked back down again, I want to look for this entry technique. Most of the time, it'll get whacked back down and begin to grind going lower. What'll happen is it'll run and start separating away from that moving average. That separation is a dead giveaway. What I do in these situations is these kind of V-top reversals like this. We know the market wants to rotate back down again. I'm going to mark a trend line off that low. I'm going to bring that trend line up around that high. Now here's where this kind of the magic happens. I'm going to look left, find one of these prior swing highs, and I want the first touch. We call it the first test is the best test in our trade room. I want to sell right above that prior high, strong red candle, closing back below the 21 EMA, the same technique I teach in our free video classes, right? So that would definitely be something I'm watching tomorrow in case we don't get that run up and that bull trap. And again, same idea, right? The amount above that trading range can project now below that range. That will give us a good target. You know, we always want to let our winners run. And in ranges, we can use the size of that break higher, move it lower. That will tell us where to leave that final target. Now, by now, maybe you're wondering, at what point could I break out and start looking to buy a breakout pullback? Is there any giveaway? There is. There's one easy trick we use with the moving average that is a kind of a giveaway that tells us that we don't want to sell, we want to buy. Before I talk about the breakout pullback going higher though, let's slow down for a couple of seconds because we've covered a lot so far. I know that most folks watching right now, you know these patterns already. You're making money with traps and add-ons. You know why we love range rotation so much in our trade room. But if you're here for the first time right now, this might be a brand new language, a brand new strategy. What the heck is this guy talking about right now? Don't you worry though, I teach this entire roadmap, this entire strategy. In fact, I have a ton of trade examples of traps, add-ons, range rotations. Guys, I teach the entire methodology in our free classes. I want to help you time better entries on this and make a lot more money in your trade account. I'll put a link up top here for you. Upper right-hand corner, hit that link that popped up there. Take that free trading course, because the strategy I teach in that short video course will teach you a simple trick we use in our members trade room that tells us exactly where to find the winning trades each day. You'll laugh when you see how simple that technique is. More importantly though, I want to teach you my 4 favorite entry setups so you can time better entries, make a lot more money. Guys, the markets are way too good right now not to be making consistent profits. So if you're still missing the best entries each day, if you've lost your confidence in your current trading strategy, again, hit that link that popped up there. Watch that free video course. Everyone loves the trade examples I include in that short video series. The best part is it is 110% free for you. And also too, folks, keep in mind too, I'm going to put all the important links you'll need to learn the roadmap, time better entries, start making money on your own. I'll put all the links you need in the description of the YouTube video. Most folks, they start making money all on their own, all from that free video course I mentioned earlier. So start there first, time better entries, get your confidence back. And also too, don't forget too, if you're on Twitter or X, I post a ton of charts and videos and updates throughout the day on Twitter X. If you're on Twitter X, give me a follow. Again, all the details you'll need to learn the roadmap, time better entries, and hopefully make a lot more money because of it is linked up for a description of the YouTube video. Okay, so now you know where, if you're new here right now you know where to go to learn the entire roadmap I'm talking about in this video. So at this point, we've talked about, and again, I will talk about the buy side down there, because one of my favorite trades for tomorrow is absorbing those bears here and running it back higher. There's 3 ways I'm going to time that entry. We'll talk about that a bit later on the video right now. But let's talk about though, we're bullish right now. We want to go up and bull trap and back down again, right? Again, ideally into that breakout pullback zone we mentioned in last night's video. But hold on though, hold on. At what point, how would I know on a breakout? How would I know when I should not sell and when I should look for a breakout pullback? I mentioned the moving average. It really is the moving average. That's the trick to know when a breakout pullback is better to buy the pullback. So for example, we oftentimes see a very sharp move going higher, and then once it pulls back to that moving average, the buyers once, the buyers twice, and we sell back down again. We always say in our trade room, the best entries are usually kind of scary, right? How fast they are. You know what I mean? The best entries are almost always scary in the sense they strong run up. So if you understand that principle, if we pop up and we start to separate off that moving average and begin to grind and grind and grind, right? See, that's your giveaway. Whenever I see a pop up, that we don't start seeing 1, 2, back down again. If it starts to give us these shallow pullbacks and grinding away from that moving average, there's 2 types of trades I look for. One is a simple breakout pullback. What that means is we basically, what was resistance now becomes support, and we look for a breakout pullback on this. Now, breakout pullbacks are very, very simple, right? Again, the best ones are almost scary, right? You'll get that sharp correction. That correction will feel very scary. But again, if you have the pop and the grind away from the moving average, now you know it's probably not a full reversal. It's probably just a breakout pullback. Now remember, I'm not going to waste your time and talk about some magic indicator or divergence or some special software. That crap doesn't exist, right? It might work every once in a while, but indicators are not going to allow us to time the entries. I've always found personally better success by waiting for a pullback to the moving average, let the bears come in and try a couple times. Now remember, when it comes to bear traps, it's going to be a higher high, right? 1, 2. Why 2? Because I want their stops, right? I want their pain, right? That's the key. If you're caught short and you get stopped out, right? What happens? You buy your way out. One of my first mentors would always say, Joe, think about where the sellers are in pain and buy right into their pain. So that is a bear trap. Now, as always, we begin the process with bear traps. As we make our run higher now, one really cool thing about these kind of pop breakouts like this is the pop leg, right? The breakout leg is a measuring leg, okay? Why is it important? Well, because once we know how deep that pullback is, then we know where the market wants to go, right? A, B, C, D. Makes sense, okay? So to get that strong pop leg, don't forget about it. That's the measuring leg. Once we know how deep that pullback is, then we know where the market wants to go. Now add to your winner before we get there. How do we do that? Shallow pullback, higher high in price, right? Shallow pullback, higher high in price. You want to get in right below that low. And again, once we know size of the pop leg, that will tell us now where to leave that final target. I got a bunch of messages this afternoon, folks making bank on that one right there, right? Good example, popping up, shallow pullback, higher high in price. Remember, see that right there? Higher high in price, below that low. No surprise, everyone bought that little shallow pullback. That's the exact same pattern I'm describing right there. So again, it's going to be a bear trap and an add-on. And again, you know when to buy the breakout pullback. You know that when you get that pop and that grind like that. Another slight variation of this, and then we'll talk about price going lower because that's a big part of the game plan for tomorrow, is if we end up popping and grinding like this, remember, it's very easy to draw a trend line off the highs, bring that trend line down around those big lows, look left, find some prior swings, right? Same idea here. If we're lucky tomorrow, we'll be able to combine that new channel along with the top of that range right there. You know, there's no such thing as guarantees in anything in trading, but I'll tell you right now, if that happens tomorrow, I think any entry pattern could probably make you money in a situation like that. So now you know how we can tell between a breakout that we should be selling for a fake out breakout or a breakout that we should be buying on a breakout pullback. Now let's kick this up one more notch now. And let's talk about now if we run lower. On the S&P right now, I've got levels at 58.20. I've got levels all the way down to that 57.76. Do not be surprised if we see some tariff talk tomorrow. Run it lower, fake out breakout off that breakout pullback as well. Let's go to the Nasdaq though. Nasdaq's getting lonely over here right now. I can't make the Nasdaq wait too much longer. You can see right now in the 60-minute time frame on the Nasdaq, we're obviously very bearish here. And again, combine that with this big pop higher, and I think it will definitely confuse some people, which gives us a big advantage for tomorrow. Now, before we talk about the Nasdaq tick charts right now, if you're enjoying this video tonight, do me a favor, please help me grow this channel by hitting that like button and make sure you subscribe to our channel because YouTube rewards me every time you like, share, subscribe, post comments. I know we're all busy people these days. I appreciate you spending a few minutes with me here every evening on these videos. So thank you so much for all the likes, the shares, subscribes, all the ongoing support. Now, I promise I'm done begging for your likes. Let's dive in here now and talk about the Nasdaq for tomorrow over on the NQ. And boy, there was that beautiful, again, if you watched last night's video, right, you were ready to go on this one. There's that trading range. Remember, whenever we see breakouts, right, it's just a matter of time. It's not an if, it's a when. You can almost set your clock to a breakout pullback. If you watched last night's video, I get a bunch of great emails on that for today. What do we have right now though on the NQ tick chart? You can see right away here, and you'll notice too, by the way, this is a 4,000 tick chart. The Nasdaq is not as much volume as the S&P. So the S&P is quite a bit of a larger tick chart there. So we see right away, right, bullish run up into a trading range. Just like on the S&P, there's a breakout pullback zone up top there as well, right? That is a previous right there. See that right there? Same thing in the S&P right now. That's a trading range. That's a breakout pullback, right? Begging to get hit tomorrow as well. Again, we call them unfinished business in our trade room because again, they love to find ways to bounce off those areas. So like I mentioned earlier on the S&P, right? That bullish range is going to want to rotate, right, back and forth. And of course, we talked about some ways to sell this thing off the high. We talked about some bull traps up there, right, some V tops up there. So I gave you guys a roadmap on that. We talked about how to trade a breakout above that high. And also too, look at this range right here, right? Range right there. Previous range right there. I got that bull channel coming up off of that low. Okay. So as we go lower here, and again, right, as we go lower here, be aware that if we go higher first and then back down, just remember that technique, the amount above, the amount below, okay? So this is a dynamic situation. We're always updating these charts throughout the trading day. And that's why it's so important that you get registered as a student, come out and join us in the morning trade room and do it right along with us. Now, very similar, right? Very similar now. If I get that run going lower, I do not want to blindly buy down here because again, we're an overall bear market and I'm not going to look for divergence or things like that. What I'll do is look for that same type of bear trap pattern, right? Let those bears come in. Let them try once. Let them try twice. Let's squeeze those stops and again, add to our winner. Now, this is why we love ranges because where does this market want to go now? It's going to want to rotate, right? Roughly about the amount it went right below it. And again, remember, get that add-on, right? Get that bear trap, get that add-on. Sometimes we don't get it. Look at this one on the Nasdaq here today. We got the add-on on the S&P, but you'll see right away here, right? Didn't get the add-on there on the Nasdaq. Sometimes you get them, right? Sometimes you don't. I like to keep the S&P and Nasdaq open pretty much the entire trading day. So bear trap, add-on. Now again, where's it want to go? Rotate below, rotate above, leave that runner. We all know we should leave a piece to run, but it's not easy sometimes if you don't know where the market's trying to go. When you know how ranges work, now you know where to leave that runner, right? Look over here, right? Run below, run above. There's a reason why it stalled out right there, right? People taking their profit off of that range here. Now, remember too, right? We don't always get that bear trap down there, right? Sometimes we get a V bottom, right? Sometimes it'll run lower and there's so many buyers up there, it just whoop and runs right back up again. If it V bottoms off that low, and remember, here's the giveaway. The giveaway is the grind, right? The grind is always a giveaway, right? It'll pop above, it'll start to separate or kind of hold right above that 21 EMA. That's a dead giveaway that, again, nothing's guaranteed, but I'll tell you right now, these V bottom trades like this, starts grinding off that moving average. I mean, these are almost guaranteed winners. The key is you want that first test off the low of that channel. And again, you want to get in underneath one of these prior swings. So it may keep going up a little bit, right? It may keep going up a little bit there. And we'll look for that prior swing, right? So it all depends on what I'm doing is I'm trying to find one of these prior swing lows that lines up around the low of that channel. And remember, in these type of setups, what I'm doing is, and I teach this, by the way, inside the free video course, what I'm doing is I'm looking for a strong green candle closing above that 21 EMA. I'm watching for bears to try once, try twice, so I can squeeze those stops, right? I'm trying to keep things simple on these videos. I can't teach all the entry tactics here. Unfortunately, on these YouTube videos, you'll learn those in the free video classes. But, traps, add-ons, failure patterns like I teach in our free video class. And again, we know the amount below, we know the amount above, so leave that runner as it rotates. Now, one small variation of this that I would add, which is a bit different than the one going higher here is every once in a while, we get stuff like this. We'll get a run lower, we'll grab that bear trap, we'll get a nice, easy winning trade running higher. But again, because we're a bear market overall, it wouldn't surprise me at all. We get our 1-to-1, and you'll learn this in the free video course. I always take a 1-to-1 target, get the first target, move stop up to point of entry, right? Get rid of all the risk. Never let a winning trade turn against you in a losing trade. Okay, so it's a winning trade, but again, bear market. Don't be surprised if we see another leg going lower. Now, my students will know this already, but you may not know this already yet. A range. Whenever we see a range breakout, the breakout leg is a measuring leg, okay? So if we see a breakdown like this, I can take the size, and this will usually happen like this, right? It'll kind of break down like this, like that, right? Then we'll see 1, 2, we'll trap back up. We'll get that pop going higher, but again, right, it's a breakout pullback, holds the breakout pullback and runs lower here. What happens is this breakout leg right there, not the entire move down, but the leg that actually kind of breaks out of that trading range, that becomes a measuring leg. Okay. And again, I mention this because this is a bear market right now. So don't be surprised if we see a breakout complete a measured move. Now, I'm going to warn you right now. It will feel very bearish. And it is pretty bearish at that point. But now we're way low, right? Now we're way low now. This is a horrible spot to be selling. A great spot for a bear trap. So in my trade room, we always look for these breakout leg, measuring leg, because these measured move, these kind of follow through measured moves like this, they also happen to be a double bottom too. A lot of times we'll bounce off that double bottom. We call this retest trades in our trade room. The bottom line is this though. The bottom line is this. We break out, we pop back up, we run lower again, either off that low or again, that measured move technique. Now I'm going to look for the exact same sequence. This is another bite at the apple. It's not a good place to sell. It's a great place for a bear trap. 1 try, 2 try, trap those bears in, squeeze those stops back up. Don't forget to keep adding to your winners. Again, you want that separation, that higher high in price, that move right below that low here. And again, if we don't get the bear trap here, right? If it V bottoms, whoop, off that low, right? If it runs lower, V bottoms, it begins grinding, going higher, you know how to trade that one as well. I just want to make sure that you know that if we get that run lower, popping up and next leg lower, we don't abandon this game plan, right? That is oftentimes the biggest winning trade of the session because now we're way oversold down here, right? Everyone's chasing after it, right? Okay. So that's a good follow-up for us as we go. Now, let's talk about a bloodbath scenario. Let's talk about a scenario tomorrow where something happens, right? Something happens, news comes out, right? The tariffs are all being jacked up. They're triple the tariffs, right? And all hell breaks loose. If all hell breaks loose and this thing really collapses, my goal now will be to start using these ranges for breakout pullbacks. And to do that, I'm gonna look for a 2-legged pullback. All right. If all hell breaks loose and we get some new update regarding tariffs tomorrow and this thing just rips and pukes running lower, I now look for a 2-legged pullback. 1 leg, 2 leg. This will be a measured move, roughly about a measured move here. My goal will be to combine a 2-legged pullback with the underbelly of these prior ranges here and then use that same bull trap, buy once, buy twice, sell back down. Because again, if we see a real strong move down like that, it's going to want to take out that low again. It'll want to rotate back to retest that low. We'll then look for a way to short that bull trap and that add-on going back lower. And then one of my favorite trades in these scenarios is once I take out that low again, it's a bear trap off that low and squeeze back up to take out that high. Again, it's a very liquid situation right now, right? Very, very fluid situation, as the kids say these days. If we do see some tariff headlines and things just puke tomorrow, I'm not chasing after it. I'm not trying to pick the bottom on those because it'll be fueled by news and fear. It's a 2-legged pullback. Think measured move. Trap those bulls in with that bull trap. Add more on the add-on. And remember, anybody who sells on that pullback, they're taking a good chunk of profit at that low. One of my favorite trades in these moves like this is that retest trade, right? Great spot. Well, horrible spot to be a seller. Great spot to be a bear trapper. All right, guys. I'm getting excited to just talk about this stuff with you guys here tonight. I love doing these videos, walking this stuff through here, planning our trades so we can then trade our plan tomorrow morning. Now, speaking of tomorrow morning, the place to be is in my trade room every morning, 8 o'clock Eastern time. If you like these videos, you'll love our morning trade room. Again, I'm going to put all the important links you'll need to learn the roadmap, time better entries. I'll put that in the description of the YouTube video. Start first on the free video course. Enjoy all those trade examples. Then come join me in the trade room and we'll do it together. In the meantime, guys, be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye for now.